This is the season for defense stocks, and many intentional investors are taking positions to beautify their portfolio. Now, today on Clockwise, we'll be showing you 5 defense stocks that are so doing well, especially at this period. And if you take advantage of them, you can rewrite your financial story in 2026. Welcome to Clockwise. Now, I'm not going to introduce my guest because it's already my in-house guest, my in-house Clockwise analyst. We'll be discussing 5 defense stocks. Please welcome Mr. Kandem.
Thank you very much for having me, and thank you to the audience.
You don't actually need introduction any longer. I think one day we should just come and start talking.
No, I mean, we have to follow the rules.
All right, now, you see, something actually struck my mind last week. You see, I was just trying to do some research about certain things, and I realized that what is actually happening today in the Middle East had happened some years ago.
Yeah.
In the 70s, still in the Middle East and still with the United States. Now, after that particular tension at that area, when the tension subsided, you see, a new crop of billionaires emerge. And it becomes a circle that after every war, there are new crop of billionaires. Those who actually understand that war does not actually mean only people to cry, people actually take advantage of it. So I'd like to ask you, what is the state of the situation now?
Okay, so like you've mentioned, which is very important, like I said in the last program, it is almost like a rule of thumb that you want to buy when the missile is in the sky. The reality is that political tensions cause market dislocations, and market dislocations actually show which is which. I had told you something the last time. There's something that Warren Buffett said, and which is that the stock market is a weighing. It's a voting machine in the short term and a weighing machine in the long term. One of the things that actually show how resilient the market is geopolitical conflicts.
Okay.
So when conflicts like this happen, the market investors panic, and then only assets, stocks that have the strongest fundamentals stay. You've seen what has happened to the S&P 500. The S&P 500 on Monday, when oil prices hit 100, when Brent hit 125, I think West Texas Intermediate hit around 118.
Yeah.
So what you had was that the S&P 500 lost, I think about, it went down to 6,590, which is about 6% off its all-time high.
Okay.
Yes. If you look, even the equal weighted index, or the S&P 500 equal weighted index, that was about 5%. Year to date, actually, as I speak with you, is roughly around 2% year to date. So everything in the market has actually been shaken out. So you want to know opportunities like this, conflicts like this actually reveal the names that really have staying power.
Okay.
So that's why opportunities show up at times like this. There is a rule. Let me take you back to 2008. I remember in 2008 when Warren Buffett was sitting, it was in the lead up to 2008, Warren Buffett was exiting a lot of positions and sat on an insane amount of cash. People were like, this guy has lost his investment streak. But there was something he was doing. When conflicts happen, when geopolitical conflicts take up the scene, it actually provides opportunity it's like a Black Friday for billionaires. So that's where new opportunities show up. And like you said when we started, when conflicts like this happen, new industries emerge, new opportunities emerge. And it is only investors that have cash on the sidelines that can take advantage of it.
Also, those actually are paying attention to the charts.
They are paying attention to the time and also the bond market, because I was monitoring all through this period. My eyes have been fixed on the bond market.
Okay.
If you look at what happened to the 10-year, the 10-year actually went almost to 4.2%. We're talking about something that was almost like more than 20 basis point uptick.
Okay.
In just a single day. Oil prices, of course, you shouldn't be surprised, because oil prices did what has never happened in the oil market before. 35% jump in a single day. It's a single trading day. That's what happened on Monday. Now, because of what is happening in the Strait of Hormuz. So this actually showed an opportunity for those stocks that have actually been hyped to be repriced to their fundamentals. And that's why we talked about that the stock market is a weighing machine in the long term. A voting machine, because a voting machine, anything can be hyped. It's like the biggest thing in sliced bread. But when geopolitical conflicts happen, when you had like the tariff debacle that we had last year, April 7th of last year of 2025 was actually like the final showdown. That's when you had the market literally bottom. The S&P 500 lost 2 years of gains. Yes. So what that tells you is that the market shows out or projects new opportunities and strong companies with strong fundamentals when there is a case of dislocation.
All right. Now, over the weekend, actually told us the war actually coming to an end. But a response from Iran said they will determine the end of the war, not Trump. And it's looking as if the war has no end. It's an uncertain market. This particular market follows a particular trajectory. There is, first of all, there is fear. Then it makes headlines, and there is reversal. Now, are we seeing such happening in the defense stock?
So here is the deal about defense stocks, and here is how I'm looking at this trade around now. So what you have is, if you observe, the war started, literally the defense capabilities, in fact, the missile launch activity of Iran has dropped by 90%. So that means that we are literally getting, I strongly believe that we are literally getting to the end of this war. The reality is that because Iran has done something very terrible by attacking its neighbors, so the people that would have actually rallied around Iran, to fight against Israel and the US, are now literally fighting Iran.
Okay.
So when you are an island in a situation like this, your firepower, your staying power is almost likely going to be depleted very soon. So I don't think this will stray for any longer.
So is the defense stocks a better place to actually invest?
So yeah, defense stocks have been doing very well. I told you, defense stocks have been doing
Even
very
before the
well.
war.
Even before so defense, before this war, we actually had the Russia-Ukraine fight. So like the likes of RTX Corporation has, from 2023 till date, it has done over, in fact, before even this war started, it had done over 110% return from 2023, just 2 years ago. So that tells you that, whenever you have conflicts like this, defense stocks,
even most nations will actually prepare for any uncertainty.
So let me tell you, remember what I said in the last podcast? I said that I don't look at this as just a show of power, but it is a very big marketing opportunity. You can never have that kind of marketing opportunity. This is like a demo. It's like a product demo. I want you to look at it as a product demo. Displaying some of those names: Lockheed Martin, RTX Corporation, Northrop Grumman, all of these names.
They're doing marketing.
Do you think that they would have had any scene for them to show their weapon capability, or even the US government itself? They wouldn't have. There was no such opportunity to show some of those Tomahawks, some of those B-2 bombers, and all of those things than now. So you are looking at a potential hundreds of billions of dollars of investment opportunity of demand coming in because companies and countries around the world will be like, okay, so we saw what happened just now. Which of those weapons should we think should we add to our arsenal?
Okay.
So it's like a marketing opportunity. And so when that's one side. This other side is that for the US to continue to prosecute this war, they need more ammunition. Even if the war were to end today, remember, ammunitions have been used to prosecute this war. So those need to be replaced. So that's insane opportunity. That's insane demand runway
and
for
other nations around Iran who actually
and
want to fortify themselves.
will also want to fortify themselves. And then other countries around the world would also think of, okay, so We think we should be able to pick up some of this ammunition
and fortify ourselves.
And fortify ourselves.
It'll be a
in
very
case
beautiful
anything
year
happens.
for defense stocks.
So it's going to be a very not years
For
to
defense
come. Defense stocks are going to perform. We expect them to perform because countries will be, I'm saying, insane hundreds of billions of dollars of demand are actually incoming. So defense stocks will perform well. We expect them to perform well. We expect countries to begin to think of how they can reinforce themselves. I mean, Iran lost 42 of their naval ships within just a week of fighting. That's a record. They lost several drone launchers or missile launchers, drone facilities, and all of that. As a matter of fact, the last onslaught, according to Pete Hegseth, the Secretary of War, the U.S. Secretary of War, is that they are going after companies within Iran that are manufacturing. They want to literally destroy Iran's capability, defense capability, their ability to project power. They want to destroy it completely. And they have actually gone at defense, at missile launchers. They are almost completely gone. They have gone to actually taking out those missiles themselves. They have gone to take out the ships that, warships that Iran has. They are now going after companies that are manufacturing the drones. So they want to completely annihilate their ability to do what? To restock.
There's something I've seen from what you're saying. You see, since there are no boots on the ground, you need actually a lot of defense capability.
There are no boots on ground yet.
Yes. You need a lot of defense capability to destroy other defense capability.
Yes.
So the market will still be going up.
You don't want the target of this war, of the Operation Epic Fury, is to ensure that Iran is not able to project power. Iran is not able to achieve anything, any capability, nuclear capability. Currently, they have about over 430 kilograms of uranium-235. A purity level is 60%. For you to be able to build a nuclear weapon, you need a minimum of 90 to 95% purity. Good. So it was very timely to ensure, because they have large centrifuges buried way under the ground. If you delay this, if they had delayed this and allowed them to achieve a 90% purity, that means Iran would have had a nuclear weapon. And for a regime that is known to sponsor terrorism, the Hezbollah, the Hamas, you mentioned them. They are the lead sponsors. So it's risky for the global community for you to have such people have such nuclear capabilities. So because of that's the whole essence of the war, is to degrade Iran's nuclear capability. That's it. For that, of course, a lot of things have to go. You have to ensure that Iran cannot project power within its territory and outside to other countries. That is the whole essence of the war.
All right, now let's delve into today's conversation. We'll be looking at 5 stocks, 5 defense stocks that can actually change your portfolio or beautify your portfolio as an investor. Since we've actually established that even if the war ends today, the defense stock will still be doing very well, because we've seen the need for it for nations around the world, and also for those who have actually participated in this war to replace or reestablish their strength, their military might again. So let's look at 5 defense stocks. From your analysis as a stock market analyst, what are those 5 stocks that you think will actually do well in years? And it's actually also a better time for investors to take position now.
So the first of those stocks I will mention is Lockheed Martin.
Okay.
Ticker symbol LMT. So Lockheed Martin, that like the biggest manufacturers of, when you talk about air defense capabilities, they are the biggest in the world.
Do they do drones?
They do a wide range of some of the most sophisticated aircraft.
Okay.
For some of the most challenging air operations in the world. So Lockheed Martin has a huge backlog, a huge runway. So that runway means that they have a lot of demand that can spread for the next couple of years or thereabout. And with this, the fact that what has been used to prosecute Operation Epic Fury needs to be replenished, that means it still extends the runway that they already have. So Lockheed Martin is one of them. And they have done very well, very, very well over the past couple of years. Of course, you know that one of the reasons why they have done very well is because as the world's biggest defense contractors, these guys have been very, very instrumental to US support of some of the conflicts or some of the wars that we've seen around the world. So that's why they hold in a huge potential. If you look at the charts, you would see that there was a retracement, but of course that was brought back up. So that 655 the support around that is rolling very steady because of course people understand that this is going to be a very big name.
Okay.
So Lockheed Martin is one of the biggest stocks. In fact, the number one on my list for these defense stocks that you could be looking at.
Can somebody still enter?
Of course, you can enter. Remember in the last podcast, I told you that we were seeing some correction. Yeah, I mean, when the stock rallies, I don't advise people to like buy into the frenzy. Allow it to correct a little bit. So people are taking profits too. So as people take profit, that's why. But when you see something that is very strong, what you observe is that even when people take profits, it's just a minor correction. Very minor correction. If you look at the charts, you'll see it. It's a very minor correction, and that has been essentially bought back up. So that shows a stock that is very strong. So I think what we have now is still a buying opportunity for some of those defense stocks. Lockheed Martin. The next one is RTX Corporation, ticker symbol RTX. Now, RTX Corporation is also a very big player when it comes to defense technologies. You know, RTX did 110%. If you look at from 2023 to now, you know, they have done.
In fact,
they've been doing very well ever since. So, these are some of the strongest names. The demand is not just for, like I told you in the lead up to this particular part of the conversation, the demand is not just coming from the US. The demand is coming from countries around the world because they have seen, I mean, what is happening now is more like a demo opportunity. So the countries, have seen territories, have seen the kind of the capability of some of these, weapon systems. So they are knocking at that. A lot of calls are going through to RTX now, other defense contractors to place order for some of these weapon systems. So
from the chart, is it the right time to buy?
From the chart, it's also a very good time to buy. It's a very good time to buy.
Okay.
And the reason why I'm saying that is, it's not just whether you believe the war will end next tomorrow or it will still continue to be prosecuted. Nobody can tell. Even at this point when Iran's capability has been degraded by as much as 90%.
But they are still boasting that they are the one that will determine.
Of course, you know, this is a psychological war. So you keep on saying, even when you know that you are literally, your back is to the ground, you still say, we are winning that, we are winning. That's a psychological war. You just want to make, I mean, they know that the US is a democracy. And so, you want to get the citizens, not just your own citizens, but possibly the US citizen to believe that, the US has not won the war. Because when they believe the US has not won the war, the next question will be, so why did we spend all of this trying to prosecute something we have not won? Okay. But the reality is that these guys lost 42 of their top government officials in less than 30 minutes.
Mm.
Yes. So they lost that kind of, so you have that, and then they have essentially lost their their naval capability completely. All of their ships are at the bottom of the sea. They have lost literally everything. Their missile launch capabilities, like I said, is down to almost zero. So how do you project power? Mm. How did you look at even what the foreign minister said? Before, he said any ship that passes through the Strait of Hormuz will be immediately bombed or attacked. But yesterday, what did he say? He said, any ship that passes through the Strait of Hormuz should be careful. That language has changed.
Yeah.
That language has changed from, we are going to attack you.
I felt that the US Navy actually escorted one particular ship.
Yeah, it was just like a test. I don't know how sustainable that will be. And the reason is because, I mean, to move, all of these things add to the cost. To move, remember, the reason why the Strait of Hormuz is essentially locked is not because there have been any missile attack on the strait, but when a threat comes from like Iran, that if you move, we deal with you. Insurance providers are not going to take that risk. And if you don't, because of the billions of dollars, like $1.2 billion of value pass through that particular strait every single day.
Yeah.
So you are not going to mortgage, you are not going to put that on the line for something you are not absolutely certain. Because the premium, if an insurance company wants to compensate for that risk, then the premium would make that particular transaction to be worthless.
Okay.
Because, I mean, if you are paying so, that's the reason why, like I told you the other time on the podcast, I said, investment in Africa sometimes could be very, why don't investors come into Africa? Africa has the highest return on investment than any other place in the world. But because of the political and the market risk, when this is priced in terms of the insurance premium that companies and investors have to pay to invest in Africa, it doesn't make sense. The same thing happens in the Strait of Hormuz. So when you price in the premium you have to pay to be able to take that risk or to have an insurance cover for that kind of risk, then it doesn't make that transaction doesn't make sense.
So now that's the second one. What's the third one?
So the third one will
Lockheed
be
Martin's.
Lockheed Martin's. You have RTS Corporation. Then you have Northrop Grumman. Northrop Grumman is also a very big name when it comes to.
What is the states? What's the states now on the charts?
No, they are doing very well. I mean, defense stocks have been doing very well. To be honest with you,
what do you define very well to be?
Very well means that, for example, I mean, the market generally has been on a downward spiral, literally.
Okay.
I mean, like I told you, S&P 500 has gone down by like 6%, though it has come back up yesterday after the announcement that we heard from Donald Trump. So, but announcement that things will be wrapped up very soon. Yeah. So, but before that, we had a correction of 6%. But most of these defense stocks are still hovering around their all-time highs. So that's what you're looking at. That's how you know.
Is it a safe time to actually buy into the market?
You know, the thing is, for a market that is projected to still move, sometimes you trying to time the market could be very dangerous. For instance, if you look at some names, a name I'm going to mention later on, like CrowdStrike, if you had waited, if you had bought like a week ago when we started talking about 2 weeks ago when we started talking about that name, you would have been up a decent amount. But if you had waited, okay, let me wait for it to correct more, you will be sitting in and then eventually buying in at almost at the top. So that's why we say you have to look at some of these names. You don't just buy, at this point, you don't just buy the charts. You're buying fundamentals too.
Yes, you buy the business.
You buy the business. You look at, like most of those names have actually maintained their, they have actually maintained a very strong support.
Okay.
Yes. Without sounding, I'm trying not to sound so technical in the interest of those that are not the technical geeks, So, but it's maintained a decent support. And then the fundamentals are very strong. Then you are looking at a stock that is going to perform very well.
Okay.
So Northrop Grumman is a very strong name that you'll be looking at. And it's not just saving the US market, it's also saving all the US government, it's also saving other countries around the world.
Okay.
So number 4 is General Dynamics.
Okay.
General Dynamics is also a very strong name when you talk about the League of Defense Contractors. They are not just servicing the US market, but they are also servicing other markets around the world. General Dynamics has very serious specialty in air defense systems. So you want to focus on, and so far, the war, the Operation Epic Fury has been majorly air-based attacks. Of course, we've had the last one, which was the what was done by the U.S. Submarine. They used a torpedo to sink a warship, an Iranian warship. So, but majorly it's been airstrikes. All of, like you said, maybe we could see boots on the ground.
Is that possible?
Is it possible? Yes, it's possible, but so it's possible. Remember that Iran has successfully gotten every single person, all of its neighbors, to be its enemies. So when all of your neighbors are enemies, guess what happens?
They actually provide a leeway.
Bam. So they provide a leeway for the US to come in.
That would be so.
The reason why we are thinking of boots on the ground is this. Remember what I said when we started? That Iran has 435 kilograms of enriched uranium, purity of as much as 60%. When all of this is over, what happens to that enrichment? You need to take care of it. You need to ensure that that is moved away from Iran's access. Because if it is 60%, though the B-2 bombers, you remember the attack that was prosecuted some time ago, Operation Midnight Hammer. Yeah, that was supposed to destroy the centrifuges at Fordo nuclear facility. You don't want them to be able to rebuild. But even if they rebuild, you want them to attempt to start all over again. It's easier for you to push from 60% to 90% than for you to start from zero.
Okay.
Or maybe essentially like 10 or 20%. So what the US is trying to do is to go in there and pick up those uranium supplies that they already have at 60% purity. Right. So General Dynamics is a very big name, which you might be considering, and it's performing very well. If you look at the charts, it's performing very well. Then number five, of course, would be one of the names that I like to talk a lot, which is Boeing. Okay. The Boeing company. I mean, a lot of people don't even know that Boeing is actually a defense.
I'm hearing that. Yeah, it's true. I thought just for the private jets and the rest.
No. Boeing has exposure to the space travel. Of course, they have capsules that actually take astronauts to the International Space Station. Even though we know who is now the king now. Then they have, of course, everybody know when you talk about Boeing, everybody knows about their business in air travel. Yes, but air travel is just part of it. They are also defense contractors too. They provide
with the US government.
With the US government. As a matter of fact, when you want to think about the defense the most secure aircraft, the most resilient aircraft built known to mankind is built by Boeing, which is what is used for Air Force One. That's the presidential jets. Good. It's built by Boeing. So that's, they're big defense contractors. And Boeing has been doing very well. I mean, we know what happened, the challenges they had with the 737 MAX, which, by the way, was more of a cultural issue. I don't want to go so much into details, but it was a cultural issue around safety and all, taking things for granted. They had the Ethiopian airline and the Lyon air crash that happened literally like months apart, which led to the grounding of all of the 737 MAX fleet, MAX 8 fleet. So it was MAX 8, 9, and 10. A little bit of background story. Airbus came in with their A320neo, which was more fuel efficient. Boeing just knew that there was no way they could actually try to design something from scratch. It would take about 10, 15 years. Okay. And at which time Airbus would have gotten all the orders. Oh, yeah. So they decided to, let's look at the most successful brand, the most successful model, which was the 737. Then they decided to put bigger engines, because the bigger the engine, the more fuel efficient it is. So, but bigger engines, already Boeing is very much to the ground, close to the ground. So putting a bigger engine meant that there's a minimum ground clearance that you need. Otherwise, the jet engines will begin to pick in, to suck in some of the debris on the ground. So that clearance was not there with the current 737 design. So they had to push the engine forward just to be able to achieve the clearance. But pushing the engine forward altered the aerodynamic characteristics of the plane. So for that, they brought in a system called MCAS, Maneuvering Characteristics Augmentation System, just to give the same look and feel of the current 737. So what that meant, to do that, they had to do that in a way that airlines would not need to train pilots again on the new system, because pilot training would have been one of the pushbacks to adopting this new type. And so, but not training the pilots mean the pilot did not know that such a system exists. Yeah. That system works by trimming the airplane when it notices that the airplane is about to is exhibiting a pitch of attitude. And so it was not there. The pilots did not know it was there. And so when the thing kicked in mid-flight, in the case of Ethiopian Airlines and Lion Air, the pilots did not know it was there. So they were like wondering what's happening. And unfortunately, since they did not know, they didn't know exactly what to do. It was not present in the log, was not present in the manual. There was not the training materials. There was no reflection that MCAS was a system on that plane. So we had those two crashes. That actually led to a very serious decline in Boeing stocks. Okay. Boeing lost a lot. They have come back on. There was a very thorough, in fact, I would say that 737 might be the safest plane to fly in now, because all the aviation corporations, all the aviation regulatory agencies around the world were part of the investigation and were part of the approval or certification of Boeing 737 MAX. So, but that's not what the point of interest is that Boeing actually recovered from that and has been performing very well. You know, the demand has picked up, though a few things happened with the Spirit Airlines where a plane actually, the door actually pulled out mid-air. There are a few things that have happened, but Boeing has essentially come back from all of those downdrafts. So it's still a very big name. There are defense contractors there, and we have a new leadership now. So that is
an advantage.
It's an advantage, and I think Boeing is a name that you could look out for. The only thing there is that temporarily, the airline industry has been hit very hard. Remember, what has happened in the Middle East has seriously affected tourism. Dubai is the biggest spot when you talk about tourism. Yeah. And then Dubai has been facing a lot of missile attacks from Iran. Some of the airports that have been insanely busy are now literally empty. So that people are trying to literally leave Dubai and all of that. So not just Dubai, other countries like Qatar. Qatar is also another country people like to visit. So tourism has been affected. Air travel has been seriously affected. I think Emirates is reported to be losing almost $100 million literally every day or so. You know, because of this unrest that they're having. So it's a very big challenge that they have to deal with. And so airlines, so I just wanted to mention this because when you look at Boeing, you might consider it as an airline manufacturer, airplane manufacturer. There's a difference. We are talking about Boeing in terms of a defense contractor and not like an airline manufacturer, an airplane manufacturer.
All right, let's look at this list again. The first one was what?
The first one was Lockheed Martin. Mm-hmm. The second one was RTS Corporation. Okay. The third one was Northrop Grumman. The fourth one was General Dynamics, and the fifth one is Boeing, the Boeing company.
Those are big names. They were already doing well.
Yeah.
They were already doing well before the war, and I think they will actually do well.
And they will do well now because the demand that they now have years of demand. for context, if we call up Boeing now and tell Boeing, listen, I want to buy a plane. Tell you, okay, thank you for the call. So this 2027, okay. So you pick up your plane by 2037. That is the kind of backlog they have in terms of demand. So this is also another part of their business that is also going to witness a tremendous opportunity for growth.
Okay. Thank you very much for coming, and thank you for sharing your analysis with us. And before we go, I'd like you to actually do some, like we always do, your final words when it comes to this.
My final word is that we should not be so, in as much as we are talking about defense stocks now, but let us not be so immersed looking at defense stocks and completely ignore other parts of the market. Like I told you, the S&P 500 has been down 6% year to date. As a matter of fact, Monday was down 6% year to date. This is also an opportunity. If you look at the market, you see a lot of opportunities. Software names are down. We look at the Mark 7, like a name like Tesla. Tesla was, a couple of months ago, Tesla was trading as 496. Now I think yesterday it was already at 380 something. That's an insane correction. So you can look at some of the software names, look at some of the AI names. We did not mention Palantir, which we should have mentioned there, but because we're saying, even when you talk about defense stock, Palantir is also there because they provide, but Palantir actually bestrides defense and AI stocks because you need Palantir. They actually help to provide the AI generated telemetry for the military operations. So Palantir is also a strong name that you could be considering. So essentially what you're looking at is you want to look at other parts of the market. We are seeing very serious market dislocation at this point. And if you are a smart investor, you will take advantage of those market dislocations. Look at some of the tech names, look at some of the software names, look at some of the AI names, look at some of the names, especially even names in defensives. What I mean by defensives, you can look at some names around like Coca-Cola, Johnson & Johnson, some of these names, depending on what you want to look, your portfolio to look like, you want to look at this. Remember also that we never on this channel advise anyone to concentrate in a sector. Don't do that. You want to diversify. You want to do stocks. You want to do possibly bonds. You want to do ETFs. You want to do mutual funds. You want to bring a lot of things into your portfolio. That also helps to smooth it. You want to also do crypto if you have the mind to do that. But like I said, crypto, you want to be let it be some part of your portfolio, except you can weather a volatility of as much as 80%. If you can see your portfolio dip by 80%, maybe you can YOLO into crypto. Otherwise, let crypto be a part of your portfolio. Why I'm not going to remove crypto completely from this conversation is that when you talk about investment portfolio, you also want to look at the Sharpe ratio. While crypto can introduce some serious volatility in your portfolio, it could also increase the upside of your portfolio. I still believe that Bitcoin will hit $1 million in 2030. I still believe that very strongly. Yes, 2 days ago, the 20 millionth Bitcoin was mined. So that means that in 17 years, 20 million Bitcoins have been mined. The remaining 1 million Bitcoin will be mined over the next 114 years. That's insane scarcity. That scarcity is off the charts. That's scarcity on steroids. You want to take advantage of such opportunity. That's why I believe it's going to hit 1 million by 2030. So you can imagine the upside it will introduce to your portfolio. But like I said, please don't go completely into crypto. You want to diversify your portfolio so that you put in shock absorbers and you put in things that will help the portfolio to grow. And that way, you will not be forced to sell. You will not be forced to make emotional decisions to sell when your portfolio dips, or to buy more, or to to chase a hype when the market is actually on a bull run. You want to be very, very disciplined in managing your portfolio, in allocating assets to your portfolio. Otherwise, you might not be able to make a successful investment journey.
All right. Now, that was a very long one. Thank you for always coming. Thank you for always coming.
You're welcome.
It's always a pleasure having you. For context, we don't give investment advice here. What we do is analysis. We tell you what we've done, how we look at the chart, and how our predictions are. We're not telling you to go and invest, but if you want to, and you want us to actually do more research for you, you can actually comment on the comment section, and we'll actually relate or get to you. Now, that's how we draw the curtains on today's episode of Clockwise. Do not forget to like, share, and also put on a bell on this channel. Also, do not forget to tell us if you agree with our analysis, if you agree with the companies we've actually listed today, or give us yours, and we are there to actually respond to you. But before we go, do also not forget that the illiterate of 21st century are not those who did not go to school or those who will not go to school, but are those who have refused to evolve as the environment is evolving. My name is Providence. I'll see you again.